Good morning from our global headquarters in New York. I'm Manus Craney. It is Bloomberg Brief. Let's set that agenda. Equity and risk markets stumble, closing out one of the most turbulent post-Fed sell-offs since 2001. The final piece of the inflation jigsaw puzzle arrives today with the PCE. Dead on arrival, the Trump-backed funding plan fails with less than 24 hours to go before a government shutdown. The president-elect now threatening the EU with tariffs unless it buys more US oil and gas. As Foxconn pauses its interest in Nissan, we speak exclusively with Ghosn, the former chairman and CEO of Renault Nissan Mitsubishi Alliance. Looking forward to that conversation. Good morning. Are you at peak hawk? These markets have lurched aggressively lower in the past 2 hours. I arrived at 3 a.m. The markets were in the green. This is the market throwing in the towel. We are a peak hawkish narrative from the Fed. Less than 2 cuts are priced on the board. I can tell you the flows into US equity markets from Bank of America, the data. The biggest inflows ever, nearly $68 billion. The 11th week of inflows is what we have seen, and cash outflows. Are you loading up on stocks just at the wrong moment? Are people just banking a darn good year and going home? Bond markets, 10s, ratcheted by 15 basis points yesterday. We're looking at the largest weekly increase since October 2023. We're flat at the moment at 455, double nickel. The scar tissue is in the bond markets. That's what Deutsche Bank are saying. But remember, the easing bias is there. Core PCE, 2.4%. That's what we're keeping our eye on in terms of the bond market. I like that. The scar tissue is in the bonds. We're also keeping an eye on some individual names. Nike falling in the pre-market. That's after the sportswear giant outlined its turnaround plan to reignite growth. Unimpressed. FedEx shares jump as much as 8% pre-market. The delivery company saying it's ready to spin off the freight division. What's it worth? Tesla down over 4%. ARC CEO and CIO Cathie Wood said she's selling more of the company's stock. Do bear in mind, this stock is up 75% since the inauguration and this year. In just a few moments, we'll catch up with Mads Pedersen, HumanEdge. And later this hour, Frank Monkam of Buffalo Bayou joins me around the desk. Plus, that exclusive interview with Ghosn, former chairman and CEO of Renault Nissan Mitsubishi Alliance, as we have that breaking news that Foxconn are on pause after their conversation with Renault. Let's kick off these markets. Mads Pedersen is the CIO for HumanEdge Investment Technology, weighing in on the Fed's decision, writing this. The market needs a steady hand from the Fed. Powell delivered wavering metaphors. This is a recipe for volatility. Volatility is expensive, and the American population is now paying the price in the form of uncertainty about borrowing costs next year and beyond. He joins me now. Mads, if you look at the bond market, he didn't do a good job. We've tightened up. They're losing incremental control over this bond market, meeting by meeting.
Exactly. This is the problem. The market hasn't moved up that much that this is a real large problem yet. We have a natural correction in a strong equity market, and we have yields moving up. But what everyone fears and what we need to watch in first quarter is that the Fed does not make a communication mess again as they did in 2022. The communication was unclear, the direction was unclear, and this increases volatility and makes it difficult for everyone in the US to run their economy, run their household, run their company. So we need a steady hand. We don't need a Fed chairman telling us that it's difficult to predict the future, that it's a tough job he has. These kind of conversations, they belong in a rock concert or maybe a pop concert with Taylor Swift. This is not the kind of communication for a serious central banker. He should give a steady hand, a short message, and he has 8 meetings more next year to communicate. So please get in line and tell us what he's going to do, easy and steady.
Will he last those 8 meetings? Just the context you've just laid out to me there, that's what comes to my mind. Do you think he'd last the road?
It depends on how much he seeks a conflict, because what they promised initially was we're not going to make forecasts based on the incoming president's policy. Yeah. What they then did this time was suddenly they ratcheted up inflation expectations dramatically. They changed their forecast, but based on 3 months of very steady economic development. The only thing which happened was that the president, the candidate who was leading in most of the polls for most of the year, won the election. So there's not a reason for changing the forecast that dramatically, but he has gone back on a promise which was not to do incremental changes back based on speculation about policy. So if he chooses to do conflict-seeking speculation about Trump's policy, he might not last. Obviously, Trump cannot really fire him like that, but he can make his life difficult, and that will be difficult for markets to handle.
Yeah, to be fair, he does sound pretty stoic about staying in the chair. Risk premia has been disrupted this week. I said to you, have they lost control of the bond market? I'm looking at the steepeners. I'm looking at the 10s. They're up 15 basis points, the largest weekly increase since 2023. Is this a healthy reappraisal of risk premia, or is it just everybody going, I'm off for 5-7 days, and I'm just going to trim back a little bit of risk?
Well, if we stand where we are now, it's a healthy reappraisal. If we take out the actual course of it, yeah, and just say markets go up 28% in the S&P, and it goes down 4 or 5, depending on where we are in the future, just while we speak here. That's healthy enough, and it's especially healthy that, for example, Tesla and MicroStrategy, which are used as volatility trades for amateurs, they are being tamed and corrected. So that part is healthy. The part which is not healthy is if Brazil has to live a year with 15% interest rates, going to 20, if Lula doesn't want to stop this thing. That's not healthy for emerging markets, and the emerging markets are always struggling when US yields are high and the dollar is strong. So that could be unhealthy. As long as high yield spreads stay tight, the situation in the US is under control.
Do you think those high yield spreads do remain tight? I mean, they are so aggressively compressed along with investment grade, but we're priced to perfection in high yield, aren't we?
Well, we were priced to perfection on Monday. We're priced to near perfection now. Probably with the situation being that defaults have come down from 2% on a 12-month trailing to much closer to 1% now, means that the actual market for these things is looking fair with the growth picture we have. And it looks like a fair risk premium you get if you have a recovery rate of 40-50%, and you only have, now the default is below 1.2%, but if default stays below 2%, and that's what we will get if we get a healthy growth next year with inflation of 2.5% and growth between 1.5 and 3. So they're priced fair to attractive because they're not so volatile, but not if we get a lot of volatility, and then people need to move out. For the time being, they're attractive. We have lots of positions in them. I have them in my personal portfolio. I have them in my funds. I have them in my mandates. I'm very happy with my high yield position.
Well, if you have them in your own funds, then that's a ringing endorsement for the fund. You talked about Brazil. I just want to understand to what extent there's going to be, you say that is a canary in the coal mine. The disruption in the real this week and over the past couple of weeks is the canary in an emerging market coal mine or in a dollar disruptive 2025 coal mine. We're just showing some of the emerging market currencies, Mads, at the moment. I just wonder, is this the start of a more tectonic shift in EM relative to the US dollar?
It's not a start because it's been a 5-year trend. The presidents of the various countries have told about their global influence as their financial market influence has been scaling back. And they should stop posing like that and do something with reforms. But if we look at in their own countries, if you look at the situation with the dollar's strength and the level of interest in the US combined with the Trump policy of confronting every country, every major country with a conflict in trade, that's a recipe for huge risk in emerging market. Remember, China is only growing because they have a net export. Otherwise, there's not much demand, okay? And if we look at the real as the canary in the coal mine, China Vanke's bonds fell to 50. That's deeply distressed, and you're not going to get a recovery in that side of the world. So for emerging markets, we look at what does the developers trade at in Brazil, in China, and what does Brazil have to do? Because if Brazil needs to continue defending the exchange rate as they've done this week, then they can't afford it, and we are facing another emerging market crisis. But if they get over it in a couple of weeks, things can normalize, and emerging market assets are just going to underperform like this year, but not worse necessarily.
Mads, as we close out the year, and thank you for being with us throughout the year, you've been so on the money in terms of being long risk. You've not flinched once throughout your calls of 2024. How do you succinctly sum up where you want to be with risk on going into 2025?
I want to be fully invested for the time being. I am looking at mainly being in the US. In our more defensive portfolios, we prefer senior loans and high yield to US government bonds. And I want to spend the Christmas holiday where I'm going to go visit my family. I'm going to go skiing like most of the people in Europe like to do around this time. And I'm going to think about when is the time to reduce this risk and to reduce it significantly. Will we get a boom in the US economy based on a reasonable effort by Trump and Musk, or will we get a disruptive fight? That's what we're going to find out in January. And if we get the fight, we're going to go to neutral. We're going to sell 40% equities. We're going to reduce our high yield positions. But if things continue, we'll stay fully invested. The markets have been strong, but there's not huge excesses, and this correction here is healthy for the market.
But if the past 24 hours were anything to go by in terms of Elon Musk and Donald Trump, president-elect, and their political agenda, it's certainly going to be a bumpy old ride. Mads, happy Christmas, happy holidays to you. That's Mads Pedersen of HumanEdge Investment Technology. There are other stories trending on the Bloomberg terminal. Let me get you up to speed. FedEx, I mentioned them at the start, but they're planning to spin off the freight division into a separate publicly traded company within the next 18 months. This will allow the company to focus on its core business, and it could boost the performance of the stock by capitalizing on the rising valuations of the standalone trucking business. FedEx trimmed its full-year profit forecast due to weak demand, especially here in the US and its express unit. UK retail sales grew more slowly than expected in November, suggesting Christmas shoppers might not boost the economy in the crucial final months of the year. Consumers remain cautious in the wake of the Labour government's first budget, and the figures are also a blow to Prime Minister Starmer's growth ambitions more broadly. And the Bitcoin slide from its record high earlier this week extended to more than 10% at one point amid the reduced scope for looser US monetary policy. The downturn weighed heavier on smaller tokens like Ether and Dogecoin. Bitcoin is still up almost 50% since President-elect Trump's victory in November. Coming up, Donald Trump's party votes against him. The president-elect has had his first big test of lawmaker loyalty. More on the vote next on Bloomberg.
Very disappointing to us that all but 2 Democrats voted against aid to farmers and ranchers, against disaster relief, against all these bipartisan measures that had already been negotiated and decided upon. Again, the only difference on this legislation was that we would push the debt ceiling to January of 2027.
Speaker of the House, Mike Johnson, there blaming the Democrats for the failure of a temporary funding bill yesterday. Johnson blames the Democrats, but the Republican-led House voted the plan backed by President-elect Donald Trump. The rejection sets the stage for a potential U.S. government shutdown, with funding set to lapse tonight. Let's get more with Kate Ackley. She's in Washington. Kate, we understand they're still furiously negotiating. Now, when it looks Johnson blames the Democrats, obviously not going for the debt ceiling extension. We need a plan C. You've got 38 Republicans who voted against this. This is quite a quantum and a core of Republicans that have really clearly defied Trump here.
Absolutely. And it does sort of give a preview of maybe what's to come in the next Congress with, an extremely narrow margin. Republicans are almost always going to need Democrats to pass some of this difficult type of legislation, especially as it relates to funding the government.
Well, I mean, President-elect took to Truth Social late last night to threaten tariffs against the EU unless they buy more oil and gas. I mean, what are the details on this? Because, of course, you have the 2 preeminent women of Europe saying, we're ready to, Ursula von der Leyen saying she's ready to look at oil and gas. Christine Lagarde said, let's be checkbook diplomacy about this.
Well, and they already, buy a lot of the liquefied natural gas from the United States. You said, what are the details here? Well, you don't get a lot of details in a Truth Social post or a post on X. But presidents do have very wide authority over tariffs. And so that's something where, a lot of times you see President-elect Trump say he's going to do something and it's going to take Congress, so it might stop it or make it harder for him to do. But tariffs is something that the president really would be able to implement and has wide authority over.
It's interesting, isn't it, that it was the one country which had been spurred any kind of narrative from the president. I mean, Canada, Mexico, very squarely lined up. I just wonder who exactly he was talking to in Europe that he made those suggestions to buy more oil and buy more gas overnight. Let's just round off with the theater of where you are in Washington today. This is nail-biting stuff. What is it that you think can get the Democrats, because this is going to take bipartisan resolution, is the general view out there. So what is it that takes the Democrats to vote for it and captures those 38 Republicans? Do you think that they will shift a majority of those 38 Republicans?
That's going to be hard. I mean, some of those Republicans, I was looking at the list. There's Bob Good, a Republican from Virginia. He's already been ousted in a primary, so he's not coming back next year. What does he care? Trump worked against him in his primary. So you have, specific examples like that where there's just a complete stalemate. You're not going to woo those Republicans to vote for something that they don't want to. But they said they were negotiating all through the night. We haven't had any signals that there's some kind of a deal. They were talking about a deal yesterday. It was really a deal among Republicans. Democrats weren't involved in that deal. You need Democrats to pass something. We're talking about the House. I mean, look at the Senate. Democrats still control the Senate for a few more weeks. So it's, you're right, it's a nail biter. It seems like we are on pace for the government to shut down overnight.
Well, before that vote, the Democrats were locked in a room chanting, "Hell no." So, it's going to be a very, very tough day ahead in Washington. Kate, thank you very much. Kate Ackley, keeping us abreast of the latest political moves right here on Bloomberg. It is Bloomberg Brief. I'm Manish Cranny in New York. Time for your front pages and what are making headlines around the world. First up, the New York Times leads with the U.S. filing a murder charge against Luigi Mangione that could bring the death penalty. The federal crime complaint against the suspect in the United Healthcare CEO killing includes one count of using a firearm to commit the murder, along with 2 stalking counts and firearms offences. Next up, the Washington Post has the potential for disruption over the holiday season. Get your packages in. Amazon workers on strike threatening package delays in some cities. Around 9,000 workers at 7 sites joined the Teamsters Union to strike. Delays are expected for package deliveries in New York, Chicago, Atlanta, and San Francisco. And finally, you can read it on Bloomberg. It's about Nike. The company has a new CEO, but his turnaround hinges on unraveling the missteps of his predecessor, Elliott Hill. Promised to revive growth at the sportswear giant. Let's get to Andrea Felstedt. She joins us now from Bloomberg Opinion. Andrea, good to have you with us. Look, you've written a lot about this. I would say to you, the one thing that went through my mind is, the ghost of John Donoghue looms over these numbers. You would say that maybe the CEO here missed an opportunity like the Adidas CEO did when he tanked everything.
Yeah, totally. This is his first outing to the markets. He said that the third quarter will be tougher as they get rid of all these, old Dunks and Air Jordans that people no longer want. But, he could have gone a bit further than that, really, given longer term guidance, maybe taken a charge for that inventory. You don't get many chances to really give a break with the past. And, this was maybe one of them, and he's missed it. They are going to do an investor day next year. Maybe that's another opportunity, but that's going to kind of weigh over the shares until that happens. And, we've already seen them fall in pre-market trading.
What has he got to do? He's come out of retirement, right? Elliott Hill's come out of retirement. He's gone on a world tour, I think, probably to re-engage with the wholesalers. But if I said to you, and you're going to love this word, it's about re-premiumization of Nike. Why do I spend double on Nike relative to a Hoka pair of sneakers? And that's what's missing.
Exactly. He really needs to come up with some hot products. Now, he's a very seasoned executive, but he's not from a product background. So the hope is that he can, he's reorganizing the company. The hope is that he can re-energize all the designers and the sneaker developers to come up with some hot products again. And he talked about becoming obsessed with sport again. But what he really needs is sports shoes that become fashion shoes. And that's what they had with, the Dunks and the Air Jordans, and they've really gone out of fashion again. They've really been replaced by the Adidas retro sneakers, and Nike has some of those that he talked about this morning, but by the time it gets them up and running, consumers will have moved on.
Well, they will. We need Danny and I to sign us up as brand icons. There you go. Different sports, different shoes. There you go. Jordan, nothing to Jordan. We can take it away. Andrea, thank you very much. Andrea Felsted from Bloomberg Opinion. Coming up, an exclusive conversation with Carlos Ghosn, the former chairman, CEO of the Renault Nissan Mitsubishi Alliance, on Bloomberg. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Menace Cranny. Let's set that agenda. Equity and risk markets stumble, closing out one of the most turbulent post-Fed weeks since 2001. The final piece of the inflation jigsaw puzzle arrives today with the PCE. Dead on arrival, the Trump-backed funding plan fails with just less than 24 hours to go before the U.S. government shutdown. The president-elect now threatening the EU with tariffs unless it buys more U.S. oil and gas. And Foxconn pauses its interest in Nissan. We speak exclusively with Carlos Ghosn, the former chairman and CEO of Renault Nissan Mitsubishi Alliance. We'll get to Mr. Ghosn in just a moment. Quick snapshot of markets. We have, as Mads Pedersen says, a natural correction going on. You have a U.S. debt ceiling deadlock. You've got Tesla dropping by over 4%. Cathie Wood divesting a little bit there. But the flows are in. You're seeing massive flows, the biggest flows ever into U.S. equities, $68 billion last week. Ground zero for the scar tissue is in the bond market, up 15 basis points yesterday on the 10-year government bonds. You're looking at the largest weekly increase in yields since October 2023. We're steady at the moment ahead of the PCE. As we said to you in the headlines, one of the biggest stories of the week comes from Japan. Honda and Nissan are in talks to form a merger to help withstand the challenges in the auto industry. The talks accelerated after Foxconn entered the fray, and we have breaking news this morning that they are putting their interest on hold. Joining us now is the architect behind Nissan's turnaround, the man known as Le Cost Killer, Carlos Ghosn, the former chairman, CEO of Renault Nissan Mitsubishi, who has worked as the CEO from 2001 to 2017. Should just be said that Mr. Ghosn is currently suing Nissan for $1 billion in defamation after his arrest in Japan in November 2018 on charges of financial misconduct, which he denies. Mr. Ghosn, good morning. Great to have you with us, sir. Great to have you with us. So, Nissan, Honda, Nissan going after Honda. Is this a pragmatic deal, Carlos, or a desperate roll of the dice?
No, in my opinion, it's a desperate move. It's not a pragmatic deal because, frankly, the synergies between the two companies are difficult to find. There is practically no complementarity between the two companies. They are on the same markets. They have the same products. The brands are very, very similar. So in a certain way, from one side, Nissan, it's a desperate move to try to find the future. And from the other side, Honda, which, if I understand well, they were not very excited about this move. But, you have to count with Métis in Japan. That means the Métis had a big say into it. So at the end of the day, they're trying to figure out something that could marry the short-term problems of Nissan and the long-term vision of Honda.
Do you think Nissan is being do you think Honda is being pushed into this deal by the economy ministry? There's politics pushing this deal, Carlos, rather than the value of the deal?
Without any doubt for me. That means having lived in Japan for so many years, I understand how influent can the Métis be. And I can tell you that from all the data that I received about the performance of Nissan, which has been miserable for the last, at least for the last 2 to 3 years, they have cash problem, they have investment problems, They're being really hammered in the United States. They got practically out of Europe. They're being challenged in China, and there is no plan in front of it. So I can tell you that means there is panic mode inside Nissan.
Well, if they're in panic mode, it then pushes the idea that the economy ministry, as you say, are in a do whatever it takes moment for Nissan.
Yeah, well, there is, in my opinion, there is no industrial logic to it. But as you know, there is a moment where you have to choose between performance and control. Obviously, if you can have both, it's the better. But there are moments where you have to choose. And without any doubt, with the Métis and everything I know from it, they prefer control on performance. So they pushed Honda into the deal without any doubt.
Well, with that in mind then, Carlos, what kind of backstops? I mean, you've dealt with the Japanese, you've dealt with Nissan, you understand the metrics to get these organizations together. Is the government going to have to deliver backstops to Honda to make this deal work?
No, I think they in a certain way, tried to push Honda onto this deal. Obviously, Honda must have some kind of benefit out of it. If not on the short term, at least on the mid and the long term. But that will be closely monitored to make sure that the impact on the Japanese society is not going to be too big. Because, you know, when you have two companies of this size and practically in the same market with practically the same strengths and the same weaknesses, there are going to be a lot of costs to be taken out, and there are going to be a lot of duplication to be taken out. So this is going to be closely monitored by the Métis.
You doubt that the synergies are there, though.
Well, I can tell you that it's on the short term, I don't see too much synergy. Obviously, you go to the classical one, which is purchasing together to try to leverage a better scale. But this is something that Nissan has done with Renault successfully in the past, except that at this moment, it's really concentrated in Japan. It's three Japanese companies which have very similar products. The image of the brand are not very different from one to the other. I'm including Mitsubishi into it. So it's going to be very tough. But on the long term, they can save on future investment by doing the investment one time in technology, doing it one time and sharing it with three companies.
Let's just press a little bit more on this. It's going to be tough, as you say, to get the synergies. It's driven by the Ministry of Economy. So there's a political dynamic to this. Is this Japan creating, putting two companies together to really try and stand up to the competition from China? Is that part of the narrative here, Carlos?
Without any doubt. It makes a lot of logic today. The Chinese automaker are on the winning side. They became, as you know, the largest exporter of cars. They are the largest maker of EV. They are being successful in a lot of new technology. They're doing fine cars. So in a certain way, yes, it's a defensive mood. It's a defensive mode that's going to be trying to shore up the Japanese industry and avoiding a cataclysm. First, a social cataclysm in Japan, and particularly to try to reinforce these companies on the foreign markets.
Foxconn have put on pause their interest in participating in this deal, Carlos. They had a meeting with Renault. It obviously didn't go according to what they wanted. Is there only a Japan solution for this? Is there only a Japanese savior for Nissan, in your view?
I don't see him for the moment. Obviously, in the team existing today at Nissan, usually you can measure the team by the results they get. You know, that's the only way you know if somebody is capable of doing something. Frankly, when you look at the last 5 years, the results are not a good testimony of the strengths of the team. Will they be a savior? I don't know. I know how tough it's going to be because you need to understand that Honda is an engineering organization. It's very strong in engineering. And Nissan is very proud of its own engineering. So the battles here to try to decide what technology is going to be adopted by the new company or by, if it's a merger, or by the new alliance, I can tell you it's going to be very tough. I've been dealing with this for many years. I remember when we took control of Mitsubishi, Mitsubishi was not afraid of the collaboration with Renault. They were afraid of the collaboration of Nissan because they know how tough it's going to be when engineers meet together. And there is this pride of my solution is the best solution, which always is an obstacle to develop serious synergy for the future.
Well, of course, you're going to have cultural issues when it comes, even if they're two Japanese firms. I think the point I was trying to get to, Carlos, was do you see the only solution being a Japanese to Japanese merger or joint venture? Do you see any possibility of an overseas company like Foxconn being allowed into this house?
Well, the approach of Foxconn, when I heard about it, was very interesting because it is something innovative. It is something that would have put Nissan in a completely different path. But the fact that you're telling me now that they are posing on it, they are very realistic people. They know they cannot do it against the will of the government of Japan and particularly of the Métis. And now you need to know also that in Renault, the French state has a big say because they are a very influential shareholder in Renault. And I'm sure that the decision of pose is coming from the fact that they know the Métis is not very favorable, and probably the French government doesn't want to upset the Japanese. I've been witness of how much the French government is bending backward to please the Japanese in the past, unfortunately.
Well, look, I know that there's ongoing issues between yourself, the Japanese, and the French, etc. But you have a ringside seat at many of those meetings. Is this, briefly before we talk about the global auto industry, Carlos, is this Renault's moment to exit? Do you think that that's what they hope for, or do you think they really do want an equity participation?
Oh, no. I mean, this alliance has been, since 2020. It's not a surprise. I told you that the alliance is a zombie. It's an appearance of an alliance. There is an appearance of a collaboration, but there was practically no collaboration at all. I think what Renault, after having the benediction, the blessing of the French government, is trying to maximize its asset inside Nissan. They're trying to get the most money out of their share. But that will, in my opinion, that will sell to Honda without any doubt.
Carlos, let's just broaden the conversation a little bit. You've lived and breathed this industry. You've seen the evolution of the Chinese electric vehicle market, the strength of the auto industry in China become. Are you surprised about how strong they've become so quickly?
No, not at all. Frankly, I've seen the signs of it when we entered China, when I was heading Nissan, and we entered China in 2003, and we started building our plants and organizing the engineering. In a very short period of time, I would say 7 or 8 years after we built the plants in China, the Chinese plants were at the top of the ranking from all our plants. I mean, we were comparing the productivity, the quality, the time to market of the Chinese plant compared to the Japanese plant or to the US plants or the European plants. And the Chinese came to number one. It's a very disciplined workforce. They are very, very eager to compete into this industry. So I think this industry in the next 20 years is going to have to deal with the Chinese talent and the Chinese know-how.
Well, Carlos, you were known as Davos man, I think. You were the voice of free trade every January. The world is bracing for a next round of trade disruption from Donald Trump. Every CEO of an auto company out there probably has their own personal thoughts, but they probably can't really express them. You can. You're free now. As the auto CEOs line up, what can they not say? What do you think they're thinking, but they can't say?
Look, if you, that means this is an industry which is by definition a global industry. You can't survive as an automaker if you are restricted from accessing any market in the world. Size matters, investments are huge, economy of scale are extremely important. So this industry is living on globalism and globalization. So I think it's very bad news for all the automakers to know that there are going to be tariffs and there are going to be obstacles for them to be present in all the market. This will translate into a lot of them having problems and certainly a higher price for car in all the markets.
Do you think you'll see a major auto failure in 2025, Carlos?
Well, there is no auto failure. There are, in a certain way, companies that are so weak that somebody else comes and buy them. When you look at the market capitalization of Nissan today, it's really very small. And I can understand that the company like Foxconn, headed by very serious and realistic management, is going to say, you know what, instead of us investing to do our own electric car, let's buy a car company. They're not going to be the only one to try to do that. Instead of building something from scratch, you can take control at a relatively cheap price of an existing car manufacturer, get rid of everything you don't need, and really concentrate on what's important for you for the future. I'm expecting a lot of moves like this in the future, particularly for the weaklings of the car industry.
Carlos Ghosn, thank you for joining me this morning. A candid conversation. Carlos Ghosn, the former chairman and CEO of Renault Nissan Mitsubishi Alliance, who served as the Nissan CEO from 2001 to 2017. It's Bloomberg Brief. I'm Manish Cranny in New York. We have a little bit of breaking news for you on Novo Nordisk. These are the markets. You've got S&P futures down by 0.7%, so it's off the lows of the day. Quick snapshot of Novo Nordisk. They have a breaking news line here. Novo Nordisk says patients on their weight loss drug, CagriSema, lost 22.7% of weight in the trial. So we're trying to understand the comeback on this, showing superior readings in weight loss in adults with obesity and overweight. So we'll come back to that in a moment. As I say, Frank Monkam is my next guest, head of macro trading strategy over at Bayou Holdings, writing this: the Fed finally surrendering to cater to the bond vigilantes, introducing the risk of a stop-go policy. We'll come to the end of that week. Frank is around the desk with me this morning. Frank, it's been a really, really tough week. The market dislocated in equities, bonds, high yield. You would say that this is a form of stop-go policy. Just how much of a pause do you think we're going to get? Is that what's dislocating this market, or is it something else?
No, for sure. Thanks for having me, Manis. Happy holidays. Clearly the Fed has kind of rained on the equities parade here going into the end of the year. And, I think what's really going on is the Fed has shifted a little bit here from being data dependent, to be honest, to being more of a forward guidance Fed here in anticipation of what's happening, with the Trump administration coming in with a tariffs policy. I think they're really trying to preempt the risk of having an inflation flare up here. But the risk, like I said, is to really have a stop and go policy here, because we don't really know what those policies are really going to look like. When you have new policies coming in, you have to kind of go through the process of having policies being designed, implemented, and the timing and also the sequencing of those policies. So I don't think we're quite there yet, but the Fed really is running the risk of kind of stopping and going here, because there's a great chance that once the Trump administration actually comes in and we realize that, yes, the direction of travel in terms of the policies are clear, but the distance and the speed of travel might not be what the Fed is anticipating right now. They might not start to talk a little bit more dovishly, and that's really the risk of having a Fed that's really ushering more volatility in the market rather than calming markets here.
Mads Pedersen was with me a little bit earlier. He said, look, Manis, this is a natural correction that we've had, a natural moment of reprieve, yes, in these markets. How would you characterize this closing week of risk off?
Listen, the equities story in the U.S. continues to be fundamentally bullish. I think there's some underpinnings there that continue to be bullish. I mean, the U.S. exceptionalism, yeah, we still got about $6.7 trillion of cash on the sidelines. We're expecting over $1 trillion of buybacks. But when you have a market that's this overstretched in terms of positioning and sentiment, and with valuation being where they are at 22 times PE, you're just running a higher risk of seeing a correction. And all it takes is really a catalyst. And I think the Fed's surprise hawkish cut yesterday just triggered that. And we had a huge gamma squeeze in the deals community. Gamma meaning, options market parlance. It's volatility spikes, dealers are short gamma, so they have to continue to sell, to cover the short position. So I think this was bound to happen at some point. We thought we were going to go through a little bit of a Santa Claus rally here and maybe have some choppiness early in the year, but it came in a little early, and that's just par for the course when it comes to a market that's overstretched.
Who's the bigger steepener, Frank? Is it President-elect Donald Trump or Jay Powell? Because they both create heckishly steep bond markets.
Absolutely, and I think it's going to be very interesting how that dynamic is going to play out next year, because I think there's really going to be a tug of war between those two. We're probably going to have a shadow Fed in incoming Governor Walsh. I think that's the Trump's nominee here, and it's going to be very, very tricky. And going back to what I was saying earlier, that the risk of flip-flopping is going to be even more accentuated by the fact that I think the Trump administration is going to put a lot of pressure on the Fed to remain dovish, right? So it's going to be interesting to see how that dynamic plays out.
But you say that next year is a year of two halves, which is, there's policy kites to fly, and then there's execution of those policies, whether that's tax and the tariffs and the deportations and immigration. Yeah. So policy effect is perhaps more back-ended, at the back end of 2025 rather than the front end.
Absolutely, but I think it's going to be really a two-phase process as we try to navigate, next year. This is the time of the year, end of the year, everybody's having the Christmas parties and trying to roll out these investment outlooks for 2025. But these investment outlooks really aren't going to mean anything until we get to probably early Q2, right? Because the first 100 days of the administration is going to be all about trying to figure out what the policy agenda is going to look like and how to really navigate through that. So I think the first 3 to 4 months are probably going to be super choppy, and it's probably going to require a lot of tactical trading. And then from that point on, I think investors are going to have more visibility on what the policy outlook looks like, and then you can have a more a comprehensive strategy as to how you want to position yourself for the rest of the year. But yeah, I mean, it's going to be a two-phase process here for investors in 2025.
Frank, thank you very much for being with us this morning. Happy holidays, happy Christmas, if you celebrated there. Frank Monkam of Buffalo Bayou Holdings. I gave you some breaking news just as we came back before we started the conversation with Frank. Let's just recap on Novo Nordisk. The stock is down 19%, the most since 2016. The drug maker said that patients on what was an experimental obesity medicine, and that's CagriSema, achieved 22.7% weight loss. So it's a question of where that is to benchmarks. I can tell you this, Eli Lilly is jumping after the Novo Nordisk. I mean, these GLP-1s, this entire industry is, as you can see, hugely volatile in terms of the data that is released. Take a look at the rest of the day for you. An exclusive interview with the San Francisco Fed President Mary Daly at 7:30 a.m. Data, all important. We're going to close out with a PCE. That's at 8:30 a.m. And then you've got the HumanEdge consumer sentiment at 10 a.m. So those last pieces of the inflation jigsaw, there's a lot of angst in this market. I can tell you we've bounced from our lows on the S&P 500. From the Bloomberg Brief team, have a happy holiday.